All right, let's get started. First off, welcome everyone. Before we get into the debacle of what's been happening with FTX, what we think happens next, so on and so forth, there is one point that I want to address. And that point is related to the fact that we were avid fans of FTX when they launched, right? And I don't want it to be sort of something that goes unsaid or something that we're hiding from. No, there's nothing to hide from. We were very much avid fans of FTX, and for good reason. They had a superior product compared to other exchanges. Their liquidation engine was better when it came to futures. They listed perpetual futures faster. Their user experience at first was not the best, but that improved when they launched the app, right? That was like 2020, 2021, right? We didn't talk about much in terms of what exchange we use in general in 2022 because, FTX was already like very large. So people would know about it. We were not in a partnership with FTX, so we weren't paid for it. Maybe we should have been, but we weren't. Like similar to how if there's any product that we like, we tell you about it. Like if there's Arbitrum, for instance, works and we like the experience, we'd tell you. Phantom when Solana came about, Ledger, Argent, so on and so forth. Plenty of different examples. But here we are today. FTX fucked up. Right? They mismanaged users' funds. And to be fair, it is very odd to see that happening because can I say that we saw it coming? No, I would say the insolvency odds of that actually happening on Sunday, right? I would have put less than 1% on that happening simply because they've been good actors in general, like FTX and SBF were generally speaking good actors in the crypto space, right? They saved SushiSwap when it all went to shit and Chef Nomi basically rugged, right? They helped Solana. Granted, they had like aligned interests, but they did help a new ecosystem to flourish, right? When Voyager came about and it was about to sort of crash, right? And obviously it would have an effect on the market, they helped them out. But apparently they helped them out with our funds, right? So all of this, because they were good actors, you just wouldn't guess that they would do a complete 180 compared to previous actions, right? At the same time, they were stress tested by competition. Yes, like CZ is like the white knight currently, right? But don't take this in a sense where like Binance doesn't have any sort of shady side either. At this point, I don't trust anyone, right? Genuinely speaking, because it's disheartening to see someone who was like the golden child of crypto representing us in Washington do all of this, right? But granted, when that started happening, it was clear that if you have significant funds, and that's what we talked about, it's not worth finding out whether they're liquid or not while having your funds on there. So that's something that I want to address publicly. And I don't shy away from this. None of us shy away from this, that we saw FTX as a superior exchange, right? But in recent times, their actions were outright disgusting, right? And also illegal, criminal. But here we are today, right? And by the way, earlier today, Max and I recorded a podcast talking about the FTX situation, which a lot of it will reiterate today. But when that comes out, we'll share the link. And that's quite interesting to...
We can't hear you anymore, Kareem.
Yeah, I think we've probably lost him. But yeah, like I think you would struggle to find someone who would confidently be able to tell you that FTX was insolvent on Sunday or even Monday, kind of thing. Kind of blindsided a lot of people, even like some of the biggest some of the traders that I trust, like, and sort of investment.
I said what I wanted to say, like in terms of the...
Sorry, Kareem, you're lagging there. You just started speaking again.
Apologies. You can hear me, right?
I can hear you now, yeah.
Yeah, cool. So what particular topic do you want to start off with? Do you want to start off with the history of FTX, Alameda, and what's happened? Because again, no one knows exactly what's happened. All of it is theories, but we do know that there is a big hole in the balance sheet. But how they got there and what they used the funds for in particular, we don't necessarily have information of that yet. But we can always speculate. And we have like theories about that.
Yeah. I mean, do you want me to start with like my theory personally?
Yeah, go for it. Let's go with it in terms of what we like. I think pretty much everyone knows FTX and Alameda are practically one and the same. We always knew this, but at the end of the day, people just turn the blind eye towards it. and wasn't too problematic. And it doesn't seem like they were trading against users, because if they were, they would have money to cover the hole.
Yeah, definitely. But so basically, like, I think obviously we've had a lot of almost back-to-back black swan events in crypto this year. For example, like we've had the sort of, I wouldn't say the Terra UST collapse was a black swan event, because there was people that saw it coming. But I mean, Alameda was obviously affected quite a lot by the collapse of UST and the Terra ecosystem earlier this year. We all know that they basically printed Luna until it was like way beyond, like almost zero, like about as close to zero as you can get. And we believe that Alameda was affected by this. We know they were affected by this, but what we didn't know at the time was that it was likely that FTX actually bailed them out. So the consensus, I mean, like we haven't seen the actual sort of balance sheets or anything like that, but we've seen news reports from Reuters, for example, that FTX basically used customer funds to bail Alameda out, and we don't think that like it's only happened once. We think it's happened multiple times. And the relationship between FTX and Alameda, like they were presenting themselves as sort of two separate entities that just Alameda would provide liquidity for FTX. And that was like sort of the extent of the relationship that we sort of, that was the front, that was all we sort of knew as the public. But obviously it turns out that Sam had been lending customer funds back and forward between Alameda and FTX. The interesting point is that a lot of the FTT token was obviously the FTX exchange token. And like this was created, like you were able to stake it to get discounted trading fees. You were able to stake it for getting access to Solana IDOs, getting bigger allocations, stuff like that. I did this myself last year when we were going through the Solana IDOs. But FTX and Alameda both had large allocations, obviously, because it was FTX's token, and they're both entities owned by Sam. So they were using the FTT token as collateral to take out a lot of debt as well. So basically, the house of cards kind of thing came crashing down when I feel like the CZ, the CEO of Binance, I think he probably saw what was going on, and he kind of knew, and he was like, "We can't let this go on any longer. If this goes on any longer, this is like sort of not an existential threat to crypto, but it would have been a lot worse if, say, we were in the next bull market, for example, and FTX was pulling in the same sort of volumes that Binance was, and it had the same sort of deposits kind of thing. So when he announced that he was like Binance was selling their FTT tokens, over $500 million worth, that probably, like, that definitely, like, there's no other way around it. Like, that sent alarm bells ringing for Sam, although we didn't know it at the time. That's an existential crisis for FTX, basically, because of how leveraged they were, and because the fact that they were running the exchange as a fractional banking reserve system, and they weren't able to meet the large demand for customer withdrawals if that ever happened. And the catalyst for that happening was CZ basically going on Twitter announcing that he was selling these FTT tokens and saying that he was trying to avoid a Luna moment, basically. And obviously, because of the amount of debt and the amount of the use of FTT as collateral for like loans, for example, for FTX and Alameda, it all basically depended on the FTT price not collapsing, and that was the beginning of that. So the CEO of Alameda, Caroline, she said that she would buy all of the FTT tokens that Binance was going to. She said publicly that she would buy all the FTT tokens from Binance over the counter rather than Binance selling them on the market. But it comes into question, like, where is Alameda getting these funds from? And it very likely would have been funded by either customer deposits from FTX or collateralized FTT collateralized debt from FTT collateralized debt. So it was all bullshit. CZ saw this, he rejected the deal, and subsequently the FTT price started collapsing. And this was like sort of Sunday, Monday period. I think on Monday, Sam started panicking. He started going to different exchanges, seeing if they could help with liquidity, because FTX was obviously seeing I think it was 6 billion, over 6 billion in withdrawals over that Sunday Monday period. And because if you're running a fractional reserve system and you've got 30-40% of your liquidity being drained in sort of a day, you're obviously going to run into issues because you don't have enough liquid assets to meet those withdrawals. So they had no other choice but to pause withdrawals if they couldn't find liquidity from other exchanges. And I think obviously all the other exchanges sort of rejected their backdoor deals kind of thing. And eventually they paused withdrawals, as we know. FTX paused withdrawals, as we know. And then Sam, obviously in a last desperation attempt, went to CZ from Binance and asked if they could help. And they put the clause on that they would potentially be able to help if they were able to acquire FTX International. So on Wednesday, obviously we had the Binance started doing Sam accepted this offer, and Binance started doing due diligence on FTX's balance sheets, seeing what they owed, seeing what kind of hold they had, what kind of liquidity hold they had, and how much it would cost to meet that. And that took it was around 36 to 48 hours, and then basically, as we know, Binance rejected the issue, stating that it was basically beyond repair kind of thing. There was nothing they could do to help. There was too many issues, both legal and from bad press kind of thing, that FTX have been mismanaging customers' funds. Now, obviously, when Binance is going through the balance sheets, they can't basically say like what was on those balance sheets. But I feel like when if you read their statement, they said that there's nothing they can do to help. They've been reading news reports that they've been mismanaging customer funds, etc., etc. Now, when they said they've been reading news reports, like that's a sort of cop out. Like when they read these balance sheets and stuff like that, and they did their due diligence on the FTX International, they 100% knew, but they weren't allowed to say that they knew. So that's the best way of going about saying that you know when you're under a non-disclosure agreement kind of thing. And basically the rest is history. And now BlockFi, there's going to be a contagion in crypto basically because FTX had been acting as a sort of line of liquidity for a lot of failing projects. BlockFi being one of them, they had a 400 million line of credit. Fair enough, that was the FTX US, but I'm struggling to see the difference at this point between FTX US and FTX International.
Well, there's a Financial Times article that shows like all the entities FTX has. And it turns out that FTX US was quite separate, but like only on paper it seems, because they acquired Blockfolio to make it like a regulated US entity. So if you are an FTX user, you may have a bit more protection. But the thing is that it's very unclear if it's only on paper or not. So it's possible that in the end they still mix those two entities together, just like how they did with Alameda and FTX. But I do feel like the US part has better protection. And I think that's also why they were able to continue withdrawals much longer there.
Weird aspect is not like FTX US and FTX International. I can understand how they're two separate entities, right? That's fair. And that FTX US is like one-to-one backed, and they've got funds for all the customers. Though they did say, I saw a tweet earlier today that said we're going to resume ETH withdrawals at a certain time. So it seems like they stopped withdrawals. So if they're one-to-one backed, I don't see why they would have withdrawals paused. But anyway, the weird part.
They just filed bankruptcy, by the way, like just now, just so you know. Like it's basically breaking news. SBF stepped down as the CEO, and they filed Chapter 11 bankruptcy.
And the bankruptcy they filed is for FTX.com, FTX US, and Alameda. So all three.
And approximately 130 affiliated companies on top of obviously the big three. Yeah, sorry, I'm just reading the news now. It's just
yeah. Well, that means it's another Mt. Gox situation. So any funds inside of FTX are going to go through the same bankruptcy proceedings that Mt. Gox went through. And that will unfortunately very likely take multiple years. I'm trying to think.
I do think it'll be a lot quicker than Mt. Gox because of how transparent and like the tracking tools we have now, although it will still probably take years.
Yeah, quicker than a decade, certainly. But yeah, it'll take. Basically, it'll be through court, right? The weird part that I wanted to talk about was all of the withdrawals that were happening outside, like in the Bahamas. That loophole that they had. You guys want to talk about that?
Yeah. I mean, they have frozen, like the Bahamian Securities Commission has actually did freeze FTX assets. So I don't think they were able to do that anymore. But there was sort of reports of people being able to withdraw, or at least there was on-chain movements.
Actually, I think I know why they were able to do that, because I'm reading the bankruptcy filings right now, and their Bahamian entity is not included in the bankruptcy. So it seems like the entity in the Bahamas was completely separate as well. And the reason for this is likely because they needed a legit entity to have an office there. So they created another entity next to FTX US and FTX.com called FTX Digital Markets or Digital Assets. And I think that was the entity which they allowed people to withdraw away from. And that was also the entity which they were registered with in the Bahamas. So I think a lot of it has to do with their accounting, how they structured all these entities to avoid regulatory issues.
Yeah, the strange thing was it was like millions of dollars being withdrawn, so it wasn't just like average retail. So it does look like it was either employees or it was not like institutions, or at least large players within the space that were able to withdraw, which obviously is an even bigger kick in the teeth, basically, for retail investors to be able to see that on chain that was actually happening. Wallets that had never even connected to FTX before were receiving funds, kind of thing.
Even Tether started freezing, USDT addresses linked to FTX, and one of those addresses held 46 million. So you're seeing regulations being extremely aggressive with FTX.
Yeah, what are your thoughts, Graham?
Yeah, the Bahama thing, the fact that it's not part of the bankruptcy says quite a bit, because it's a loophole and everyone from the FTX team is a resident of the Bahamas, right? Obviously, a lot of them have been fired, but I am talking about the higher level people, the senior
The inner
executives.
circle.
Exactly. And at the same time, I'm sure that they bribed their way. There's a reason why exchanges use weird jurisdictions, right? Like BitMEX used Seychelles, Binance went to Malta, and FTX went towards the Bahamas, right? And that reason is very simple, because it's easily corruptible, right? It's not easily corruptible. Any country is. It's just cheaper corruption, right? So that means that they can influence regulations in that sense. But I have a feeling, I was talking about this on the podcast with Max earlier today, I have a feeling that they've convinced Bahamian officials to actually open up accounts, right? And so maybe they're sort of forced right now to allow them to withdraw, and hence the loophole. And that loophole even including through the bankruptcy, which is very odd.
Yes, I think it's definitely something they have thought about in the past, maybe too, because if you look at their entities, it's very well structured in a way where if things would go wrong, SBF and the inner circle would not be the ones who would be hurt, as they have other entities not affiliated with FTX, while the customers, the retail, and everything, that's what they put at risk. And that clearly shows that I think a lot of this was not an accident, and they did know that they were doing things that were unethical. Because if it was, they would not have structured it in a way to be able to get away with so much and be able to hide so much of their activities.
Yeah, I mean, no one forced Sam to transfer funds to Alameda. They could have let Alameda go under and it would have been fine. Do you know what I mean? Yes, they would have lost. It would have been not great for the projects that Alameda was following. It definitely would have affected the markets, but it wouldn't have caused. I just don't understand how you lose upwards of 10 billion trading. It just seems like Alameda had no bear market sort of plan or anything like that. And then to actually actively go out and start bailing out other failing entities when you're secretly failing yourself is just beyond me. And then to use customer funds to try and plug the gaps, like it's completely like it's horrendous. Like I don't think I've seen like complete mismanagement like this in crypto like in a while. And obviously now there's thousands, if not hundreds of thousands, of people like that are stuck and have to wait for the outcome of the Chapter 11 bankruptcy, which, as we know, takes years because legal processes are like there's no simple fix to it as well.
Yeah, it will take a while. The one thing that I know is that FTT's price is going to head to zero pretty quickly now.
I mean,
Well, again, not financial advice like that. I don't know.
I think I explained it in the article I wrote. Like the scenario we're in now is the worst case scenario because a bankruptcy is not the best for customers. And unlike what Bitfinex did, a lot of money is not going to end up in the hands of customers, but end up in the hands of lawyers and consultants. So there are going to be a lot of middlemen involved. And I feel like this is really the like the worst case scenario, as I pointed out in the article I wrote 2 days ago.
Yeah, I mean, if you look at the markets now, they've instantly reacted to that bankruptcy. It's the uncertainty as well. I feel like there was still obviously we had the CPI print yesterday, which was above expectations, like higher, better than expectations, which sort of led to a rally in stocks and crypto as well. But there's too much uncertainty in the crypto market right now for that to be a continuation, especially with that Chapter 11 bankruptcy, because we're not sure what the contagion will be. I know like Blockfolio was probably one of the obvious candidates because of that line of credit they were kind of dependent on from FTX US, but now there's no way that's basically they stopped withdrawals because of the uncertainty. And although things have become a bit more certain now that FTX has filed for bankruptcy, like Blockfolio is still completely like, I don't know what they're going to do without that line of credit, basically.
Yeah, I would
point. Sorry,
go for it then.
Kareem makes a good point about, if you want to corrupt politicians, in some of these places, it costs considerably less than some other places. But another point is that they're also tax havens. So I think they go there knowing that they can get away with more. And then if they need to buy wiggle room, they can do that there. But I would say at this point, a lot of us trusted and had good faith in SBF, but I think it's pretty obvious that he definitely had ill intent. I don't think it's like mismanagement. I think we misjudged his character. And I think that it's pretty obvious that what he did was a intentionally malicious thing. And he knew, of course, that bankruptcy was a good way to get out of it to some degree. I mean, one thing worth noting is that both of his parents, I believe, are law professors at Stanford. So, I mean, he's obviously not a stupid guy, but I think that he definitely did this intentionally. He just didn't plan to get caught.
Yeah. I would say, though, I think we're, again, talking about that earlier in the podcast, but since it's going to take a day, at least a day to edit, right? I'll say this again now. We're talking about market effect, right? Now, it is what it is, right? That's the situation with FTX. It sucks, and fuck you, Sam. But looking at it like moving forward from the market's perspective, I thought there were two scenarios. Scenario number one is there is some sort of bailout announced, right? Quite low odds, about 10%, 90% that it's an outright bankruptcy and insolvency. So bailout, if that happens, then we rally on that day and we would have bottomed, right? Assuming obviously the CPI print and then the Fed pivot is like near, given the fact that CPI print came in quite well, that theory is like ongoing, right? And if there is an insolvency and like there is a filing for bankruptcy, market would take a hit 100%. But I would reckon, and again, I want to stress the fact that this is only my opinion and it's not financial advice. I would say we bottom today. I don't know where. I have no clue, right? But I don't like this is probably like as bad as it gets, maybe. But again, don't take my word for gospel. What do I know? I don't know why, but I feel like I have to say this again. Not financial advice.
Yeah, I mean, I would tend to agree with you. Like the thesis that we laid out over the last couple of weeks was that the macro situation is easing. This was before the CPI print. Like we discussed things like rental prices ticking down for the first time in September. Like housing inventory is actually increasing, so the supply side is becoming less tight. Like there's more properties available for rent, which obviously is competitive for prices. Like there was a lot of factors that we considered to be positive for macro, but obviously center stage for crypto right now is the whole FTX situation. But I tend to agree with Graham. Like, how much worse can it realistically get? There's like we're getting more clarity every day as like the days go on. The FTX bankruptcy, everyone knows what's going on with that now. There's like that as Stan was saying, that's like the worst case scenario. So like the sort of, I would say that the macro thesis is still in play, but we need to sort of move on from this sort of this narrative that's currently like hitting crypto at the moment. But obviously we're unsure how long that's going to take realistically. But as I said, the Contagion, we're not sure the full effects. Who's actually at risk from the FTX insolvency in terms of both DeFi projects and centralized entities, for example, Blockfolio.
Do expect to hear more of that, right? I mean, some entities have already become public, like Genesis. Ren published a statement today. So, I mean, last time during the Luna debacle, things hit the bottom, not during the contagion, but before that. So it really depends on how big the contagion is. But I would say a lot of it is being priced in probably already because of the uncertainty.
Yeah, definitely. I'm trying to think, like the sort of Tom or on-chain guy, like he tends to agree. Like the current sort of dump that we're seeing now is obviously a reaction to the news. And as Stan was saying, like it's likely like this is like, because unless someone's got insider information, like the majority of people don't know exactly what's going to happen. Like they don't know what the full extent is. Obviously, this will all come out in the Chapter 11 bankruptcy proceedings, but that's going to take, as I said earlier, months, if not years. So unless there's like an imminent dump of BTC to pay for, like to pay debtors, then this is all speculation at the moment. Like the sort of uncertainty in the market you can see on the charts, kind of thing.
By the way, if anyone in the audience has a question or they would like to come on stage in these times, right? Feel free to raise your hands and we'll invite you for sure. Until then, like we'll keep the discussion
I think,
flowing.
Kareem, people want to hear about Solana. I'm not sure who is most qualified to talk about it, but I'm seeing a lot of questions in the chat about Solana and the long-term view because of the unlocked Solana and the relationship with Solana and FTX.
I can talk about it price-wise. I can't really talk about it like too much in terms of development, like more of a general picture of Solana. Like I hold an opinion there. But if anyone else wants to start off, feel free.
I'd be happy to give at least a little bit. To be fair, I'm in the Eastern time zone in the US and I haven't looked at news today. But as far as the past few days and the things that we've been dealing with Solana, one of the most important things I think it was, without looking at numbers, I think it was 47 million or 48 million SOL tokens that were looking to be unlocked, a day and a half ago. And that made Solana get hit a lot harder than some of the other coins that got hit when FTX, went belly up. And there was a little bit of misunderstanding, including on my side initially, about what was going on. It looks like there was a company that was running a lot of Solana validator nodes, and as the market took the hit from FTX, they started turning off their nodes. And the thing is that Solana Foundation, if you have nodes, you have a certain amount of Solana that you have to have staked in order to be able to participate. And that's why people will stake Solana with nodes, and then nodes reward you for staking with them. And that staked Solana allows them to participate in the network. So what Solana Foundation will do is, if you want to run a node and you don't have enough Solana, sometimes if you are a promising company, they will delegate Solana to you to allow you to participate. And when this company turned off their nodes, Solana Labs undelegated from them. And that was not all of I think that was about half of that giant number that was going to unstake. And what Solana Labs chose to do instead of just unstaking straight up was to redelegate it to other validators to try to help secure the network and keep things decentralized. But initially, that wasn't clear. So when that happened, everybody saw that giant number and got really freaked out, which, it's still a huge issue. The amount of Solana getting unstaked is still a concern, but about half of it was from this situation. And what Solana Labs ultimately did was redelegate it instead of unstaking it. But the public opinion before people realized these details was it looked like Solana prevented users from unstaking their own Solana, which obviously is a huge hit to decentralization. I mean, that's a centralized move if there ever was one. So then everything got worse because people were like, oh shit, they won't even let us, undelegate our own soul. This isn't actually decentralized. So it was this whole situation. And then once it was clarified that the soul that they prevented from unstaking was only their own and they were only redelegating it in order to try to continue to decentralize and secure the network, that made things a little bit better. I mean, with all the Solana still being unstaked by users, that's still a huge situation, but it's not as bad as it seems. So that's the number one thing I want to explain to people, because even that wasn't even clear to me, and I'm pretty in tune with Solana. So that's part of the situation. There are a lot of projects on Solana that have talked about potentially moving chains, but I have not seen any significant ones actually move to do so. What I would personally look at is if we do actually see a lot of those projects start to move, that could be problematic. But at the moment, I'm still feeling pretty good about Solana personally, although I admit that Solana is one of my preferred chains. So, I mean, take that with a grain of salt. But I still feel good about the situation, but I definitely would watch the situation and see how it develops. There was a lot of good things that came out at Breakpoint, including the partnership with Google Labs. So there's a lot of positive looking news on the Solana front, but it's definitely worth keeping track of and watching. So that's my 2 cents. And if anybody has any questions, I'm happy to do my best if I know the answers.
One other thing, regarding Sol's recent price action is Alameda and FTX, they hold a lot of Sol. I'm not sure about the number, but I believe they hold over 1 billion Sol tokens, or $1 billion, I believe. People were speculating because FTX collapsed and they were just selling a lot of Sol tokens. If you even look at Sol's price, it's down 65%, almost 65% this week, and it capitulated at a high volume. And there's a lot of FUD, there's a lot of fear regarding Sol. Personally, I believe that the technology is getting better. They have a lot of good updates coming up, and there's no reason to be afraid in terms of technology. But in terms of price action, you could see a single digit Sol in the coming weeks, months. I don't know. Of course, no one knows. I'm still bullish about Solana, and I believe that although FTX were, really prominent investors in Solana, they boosted the ecosystem, they drove a lot of capital. If you look at their numbers, NFTs have been thriving, users have been thriving. They're integrating, new scaling solutions. They're having their partnership with Google Labs. You have Jump Crypto and Google Cloud are building, new validator clients. So in terms of the network itself, even the number of nodes have been increasing. The issue about Solana being unstaked, validators love to accumulate Sol or even any token at a cheap price that makes them good profit over the long term. So I believe that there's a lot of FUD regarding Sol, but I don't see the view where a lot of people were saying that it's going to go to zero, it's going to be the next era. You might see Sol as a single digit, but I'm still pretty confident about the chain in the long term.
I
And
think
sorry, I'm a bit sick, so my voice is kind of messed up.
I think, as Dan pointed out, it will depend on how the community will come back from this. So Solana Labs and the Solana Foundation, they claim that they had no exposure to FTX and that they have enough runway to keep supporting the ecosystem. They do this by funding, helping developers, organizing events, obviously developing themselves. So if that is true and they can continue to do that, then I think that's already like a good start. But the second thing will be about people still being able to trust Solana and developers staying there. So things to look after will be the TVL on Solana. Are a lot of people continue to, removing their TVL and moving into other chains? Or do people decide to stick with it? And as Dan pointed out, you'll have to look at the developer activity and if the builders decide to stay there. Because in the end, FTX and Alameda provide a lot of capital, but it were the developers who were able to grow Solana from the ground up. So I think that's really going to be the key here. If Solana can continue to, provide innovation and provide new protocols, or will it turn into a ghost chain with, less and less liquidity and less developers? And I think we're right now in the middle. We can still go both sides. and it will really depend on the community itself if they decide that Solana is here to stay or not. Because in the end, that's really what it's about for Solana right now. It's not about FTX or Alameda itself. It's about the community still wanting to believe in it and wanting to continue to build on it.
Yeah, and if I could add one more thing, I agree with everything that both Stan and Yazan just said. Obviously FTX and SBF have been a huge face for Solana. So as the FTX situation develops and if and when things get worse, that could definitely affect Solana. Personally, I'm hoping for single digit Solana, but as Yazan pointed out, when you see Solana get this cheap, it's also possible that you would see a whole bunch of new validators come in because they need that Solana that I talked about in order to participate. And if we see single digit Solana, then that may cause new validators to show up because it's affordable. But one more thing I would watch for is you always have the risk that a centralized entity starts to make a significant portion of nodes. For example, I've kind of joked, but also I'm slightly watching the situation of if Google Labs, they have a new development situation that allows them to have single click, easily deployable Solana nodes, which is good because you and I, as node operators, could potentially step forward and deploy these easy to configure nodes. It really streamlines the process. But if you were to see someone like Google Labs suddenly open 100 validators because they can afford to buy the Solana to operate them, you never know what could happen. So that's definitely another approach to take and to watch. And definitely the FTX situation unfolding worse could also make Solana worse in the short term. But like I said, I agree with everything that Yazan and Stan just said. And a lot of the developers honestly are looking good. I mean, everybody talked about the potential of switching chains, but I've yet to see even a single significant project actually move to do so. But it's definitely something to just pay attention to because we definitely could go either way on this.
Yeah, I mean, with proof of stake chains, you always have risks of centralization because that's how just the mechanism is. It's easier for large holders to accumulate, for example, tokens than to buy equipment. So I believe the argument for centralization can be fitted into every proof of stake chain. And even in December, we're seeing Neon Labs bringing the Ethereum virtual machine to Solana. So in terms of development, I still believe that will thrive over the long term because when you think about it, Ethereum wasn't Ethereum today back in 2017. Bitcoin wasn't the same back in 2009. So these issues happens to blockchains. But the most important thing, as Stan mentioned and Dan, is to monitor development and people who want to fund projects. So that's my perspective on Sol.
Yeah, I agree. And I mean, like Yazan just said, you have a risk of centralization in situations like this, but you also have the potential for lots of new validators to show up. And if that happens, then you increase decentralization. So definitely both directions are possible.
Yeah. I'll give you my take on Solana and Sol in general, like price action. So before this entire debacle, I was in the camp that Sol is going through its 2018, 19, 20 ETH cycle, right? And that is when ETH reached 1,400 and went all the way down to $80. And right now could very much be Solana's $80 moment. By the way, the market is not reacting too badly about this FTX thing. I'm watching it. But in general, Sol is very heavily influenced by Sam and like the FTX team in general, right? That influence will need to transition towards devs, right? As long as the devs keep on building and they keep on liking this chain, then it's all good, right? But that transition will take at least a few months' time. I don't know how many, but I would reckon anywhere between 3 to 6 months until the devs have the influence and not the FTX name, right? Especially as the current situation like keeps on getting worse for FTX. So regardless of whether I think it's a good price to buy Sol now or not, again, not financial advice, I do think it's gonna, yes, it may have like 100, 200% rally, so on and so forth. But in terms of all-time highs and bull market, so on, etc., I think that happens in like 2 years, 3 years time, similar to the ETH cycle that it went through previously. So yeah, I am more personally, I'm happier buying Sol once a range develops and it breaks out of that range, similar to the $80 to $400 range on ETH. And yes, that's a lot of multiples in between those two. Like that range is quite wide, but it became like a very accelerated move once it broke out of 400, right? And again, it's just a personal preference there.
Yeah, I think Kareem makes a really good point, and I agree with that. Personally, So for myself and my own portfolio, I don't buy Sol as an investment opportunity specifically. Like I'm not trying to trade it and make money. That's not my personal approach to Solana. The reason why I'm excited to watch for hopefully single digits and get accumulation is because I have good conviction in the chain itself and a lot of the projects. So definitely it's like two different ways to look at it. I think Kareem is dead on with what he just said. But from my perspective, I'm looking to accumulate for the long term. It's definitely, if I was a trader and that was my main goal was to make money trading, personally, I would not pick up for my portfolio now because I don't have a trading background, so definitely don't go making portfolio decisions based on this. But for myself, I think that I'm sure something else would perform better short term than Solana would. I mean, you might be able to scalp or something, but my whole perspective on Sol is accumulation for the long term for the projects that are within the ecosystem.
Yeah. Any more questions? Like we've covered Sol. Any questions from the community, from you guys about anything else?
There's one.
Because I think you could go
Sorry.
for it.
I was going to say there's one. It's just basically like do we think SBF goes to jail over this?
Yeah, what do you guys think?
I think
I
my
don't
personal
think so.
opinion is it really depends on like who goes after him, where they go, like what jurisdiction they go after him in, what laws they go after him for, like he broke, and like it's very difficult to actually get someone to serve prison time for like financial crimes, as we've seen, kind of thing. It's when you go.
Someone who pays that much for campaigns, Biden's campaign, and of most probably also like some corruption and some palm greasing when it comes to the Bahamas, right? I doubt that he ends up in jail. Although he should, right? But I just doubt that it happens.
Yeah.
I also doubt that he goes to jail because he's so well connected. I mean, obviously, Kareem just laid out, the Bahama thing, and the political situation. But like I brought up before, his parents are just as connected as he is, if not better. And he's a smart guy, despite being a terrible person. If I were personally Sam, I think I would be more concerned about a person who I had stolen money from finding me in the real world than I would actually going to jail. Because as we've all seen, people often don't go to jail for crimes like this, despite them being more egregious than things that people do serve long terms for. So I say no, but if I was him, I'd be scared to go outside.
Oh yeah, that part 100%. No doubt about that. But yeah, I think the next topic that we can talk about is how this develops. Because look, at the end of the day, the reason crypto was created, the Genesis block on Bitcoin, states the part that was said in the Wall Street Journal, I believe, that the UK Chancellor is about to bail out the banks or something along those lines, right? And that is because when the financial system is handled by humans, right, regardless of how smart they are, regardless of how reputable they may be in certain periods of time, very obviously, and it has become even clearer now, right? Humans can gravitate towards corruption, right? And that's just the truth of it, whereas code cannot be corrupted. So this obviously is very sad that the centralized part of crypto has gone through this, right? But at the same time, there's a silver lining where this may be the catalyst that we need to boost adoption and people towards DeFi, because I'm always in the camp of, okay, say I want to invest in something DeFi related, say for instance DYDX. Why? And not long term, but like more over like a year's time. Why would the situation in a year's time be different from where it is today? For the price of DYDX to go up, it will need more usage, more popularity, and people will need to depend on it, similar to how they would depend on Binance, for example, right? Revenues go up, so on and so forth, the whole 9 yards. But why would people choose a decentralized exchange over a centralized exchange when the convenience is just so high on a centralized one? And I never really had an answer, right? Because generally speaking, no real big problems. There were problems in the past, like a hack, for instance, in Bitfinex, but it wasn't mismanagement of funds. There was a hack in Mt. Gox, but again, not mismanagement of funds, just like lack of communication. But even that is like pretty old. So I started thinking, what's happening today, that can very much be a catalyst. And the price of DYDX, I'm going to have a look at GMX as well, but the price action of DYDX is decent. Like everything is down except DYDX is up like 9% on the day and Live is up 1%. So yeah, thoughts on this being a catalyst for DeFi?
If I could add real quick, I totally agree with you, Kareem. And I come from a security background, so my stance on these things is always, if Kareem and I are going to do a transaction with each other, it's great if, I'm trustable and Kareem's trustable and we trust each other. But what's even better than that is if we don't need to trust each other. So the way that people always say trust but verify, another thing that you'll always hear me say is it's great that you can trust somebody and it's great if that's an okay thing to do. But the even better situation is to not have to trust them, because if you do trust them and you're required to, it's necessary. Then if you get it wrong, you have a problem, just like we all learned with Sam. But if you don't need to trust and they're still trustable, that's fine too. So I think it's important to advocate for privacy and protection in situations like this, which is why you always hear us talk about things like cold storage and ledgers, because it's better to be safe than sorry.
Yeah, I think in terms of the people gravitating towards DeFi, I definitely like the user experience has to improve. Like I think like what for your first couple of transactions, like everyone freaks out, like you're double checking I mean, you should do this anyway, but like you're double checking to make sure it's the exact address, checking every figure kind of thing, like every character. And even then, sometimes like when you're first starting out, you send assets to the wrong place. You don't include a memo, for example. Some assets require you to put a memo in. All of these things, like I think the overall user experience from like that perspective has to improve, and also the user experience on decentralized exchanges and stuff like that as well. Like although it has been improving exponentially over the last sort of year or two, there is still a lot to be desired in that sort of aspect. And I mean, obviously, it's basically what Kareem said. Like centralized exchanges have got this down to a T. Like I feel like centralized exchanges really can't get more easier to use. There's not much they can do there to sort of improve user experience. And then most centralized exchanges as well have a professional version and a like a regular version where it's just you've got a buy button, you've got a sell button, you click the asset you want, you put in how much you want to buy, you press buy and it buys it for you. Whereas with like for example, if you go on a decentralized exchange, you're clicking the buy button, you're accepting the transaction, you're waiting for the transaction to go through. You need to have various assets in your wallet to pay gas fees, stuff like that, which are all kind of unavoidable. But I feel like it could be a lot smoother to get to the point of the trade than it is just now. And obviously that would be required for people to move from centralized entities to decentralized entities en masse. Should we move on to questions, or does anyone have anything else to add there?
I do have one thing to add. Alameda Research also filed for bankruptcy. And if you go through the document, which actually, let me send the link in the chat if anyone wants to go through the document. There it is. If you go through the document and you scroll down to the 4th page, you'll see the estimated liabilities. And that number is between 10 to 50 billion.
That begs a question, like how can the balances be like, how can your accountant be that bad that you've got a discrepancy of 5x? Do you know what I mean?
Yeah, so they have, so it says both estimated assets and estimated liabilities. Estimated assets are also between 10 to 50 billion. And I think it's like closer to 10, obviously, than 50. And the number of creditors are more than 100,000, right? But I reckon it's more than 100,000 because it's FTX users in that case. So maybe people are going to request their funds from Alameda itself. There's definitely a hole, but let's see like how big of a hole it is. Yeah.
Oh yeah, I just read the document. It was a tick box like estimated liabilities kind of thing. Yeah, I mean that's still pretty bad, but like I thought it was Alameda saying like their
how
estimated liabilities were between 10.
they're actually being.
You're lagging pretty bad, Max.
Oh, no worries.
You can try again, but yeah, and I mean like over 10 billion obviously is contagion effect. Like there's no two ways about it, but it's the uncertainty behind what the true extent of that is going to be, exactly what assets are involved. I mean, like if I would say for the most part, if it's like altcoins, we know it's not altcoins, but I mean Alameda they had their toes in every chain, so I don't think any chain's going to get away, or at least any of the major chains are going to get away unscathed from any liquidations or anything like that takes place. But yeah, it's just I keep saying it, but it's like so true. Like the level of uncertainty right now is just kind of peak, which leads me like it goes back to what me and Kareem were talking about earlier. Like things get more certain as we go on, but like I'm struggling to see right now how it gets much worse than this.
Yeah, Do wonder how honest they're being with their estimated assets number there, whether they're saying, oh, we've probably got less than 10 billion, but we'll tick the above 10 billion so they both match, or whether they actually are likely to have numbers that are similar to their
That's
I'm not
liabilities.
Yeah, I don't think you can lie about that.
But then
I'm
it's
not sure. Again,
an estimated number, and when you're choosing between sort of 10 to 50 billion
Yeah.
and up to 10 billion, it's an easy, like, you could easily, if you're a couple of billion shy, you'll still be able to get away with it. It's not going to be prosecutable by any means.
either the number could be like they have 10 billion assets and 20 billion in liabilities, right? So then it's a 10 billion hole, or they outright lied, or like the hole's like maybe smaller, larger, I don't know. But I wouldn't be surprised at this point. I wouldn't be surprised if they lie on legal documents, but that would send them to jail. I think that's something that you can't like get away from.
No. And I mean, it says like on the form, literally, I'm reading it right now. Bankruptcy fraud is a serious crime. Making a false statement in connection with a bankruptcy case can result in fines of up to $500,000 or imprisonment for up to 20 years. But when you get 10 to 50 billion liabilities, what's a $500,000 fine? And if you can get someone to take the fall for that, then. But I mean, like their books are going to be open anyway, so why would you lie about it? Do you know what I mean? Like there's going to be probes and sort of audits and stuff like that from during the court proceedings. So I don't think that's something they can lie about, even if they wanted to.
Crazy we've gotten to that point, though, right? Because imagine if this again happens in like 5 years' time. It's better, 100%, because you custody your own funds, but a single error in the code like also fucks everything up. So far, nothing too serious. There's been hacks, very obviously, right? And again, that's where the issue is. Like DeFi is where DeFi was 3-4 years ago, right? When there were still like big hacks happening, because we still see big hacks in DeFi. So it's a problem of the trust in the industry overall. But at the same time, I think that I can speak freely for all of you guys that the overall vision for crypto and where it's headed, like overall, is unscathed, so to speak. It's just that it was some dirt was thrown on it by Sam. But yeah, it sucks. It sucks that you couldn't trust anyone in this industry, right? Because I would have liked to think that there were like at least some people that are trustworthy, right? And apparently not. So yeah.
Human
Yeah,
greed
one thing
is
that-
the worst enemy, Kareem. That's why.
But I don't get it though. Like
One thing I would add
just-
when it comes to these things is that adoption for good, privacy and decentralized type of like the security side of things, adoption is always much, much lower than you think it would be. And I hate to say it, but I'm sure that this will happen again, probably multiple times, despite, you looking at this situation and going, oh, I bet a lot of people will buy a ledger now. And I bet a lot of people will be more careful. And a lot of people will. But adoption of good practices is always much lower than you ever think it'll be. You'll be shocked at how many people will get caught in this again when it happens a couple years from now with whoever does this next.
Yeah, and it's because like we are really the minority kind of thing. Like there's still billions of people that are not using crypto daily. Like all of them are not going to have that memory that we've got, kind of thing. So like that's a sort of catalyst for it happening again as well. And it's the complacency point that I brought up earlier. Like people get complacent over time. Like the longer this.
But what type of greed is this, right? Like, but he was a billionaire. Suzu was a billionaire. Like, I was talking about this with Max earlier. Like, what are they trying to reach? Trillionaire status, right? Like, what kind of fucking greed is that, right? Like, if they're decamillionaires, I'd get it, right? I'd say, cool, they want to get into the billionaires club. But what we want to become like a trillionaire, and that's your goal. Because if that's what you want to do, that's definitely not the way to do it, right?
I mean, it could like
that's what I don't get.
It's a lot. Like I think a lot of it could potentially be explained by the effective altruism that the FTX, like the team sort of had. Like I know Caroline, I know Sam, and they're all effective altruists. So like the key premise there is that they're trying to make money to sort of get what's the word, like give away, like help other people, kind of thing. But like if that's the overriding factor, then what about your own customers? Do you know what I mean? So I just don't buy into that.
I think you're right. I mean, they were very utilitarian. So they didn't look at these things from an emotional standpoint. They would look, what's the best for humanity? So maybe they believed, okay, we don't care about our customers. We think we are smarter with their money and can generate profits in a way that they can't. So we are, for that reason, we can justify doing this. I think they found ways to justify their actions, which obviously weren't justifiable, but I think because of their effective altruism and how they were so utilitarian, they were able to justify it in their mind and be able to sleep well, you know?
Yeah, if
I
that,
think
if
it's the hero status.
yeah,
Go for it, Eugene.
I was gonna say, like, if that was the case, then if there was an event at the Olympics for mental gymnastics, then the whole team deserves a gold medal for trying to justify what they did.
Yeah, I think it's because when did their fuck up start? Allegedly, again, it's just a theory. It's like with the entire Luna unwind, plus Voyager, plus BlockFi, and the $500 million checks, $250 million checks, which apparently we wrote, not them, right? And that was a case of wanting to be the hero that saves crypto, maybe because he felt so good about helping Solana towards adoption and taking SushiSwap out of the gutter after Chef Nomi like screwed it. And maybe he just likes that feeling so much he became addicted to feeling like he's the hero, and that's why he made those decisions. And he was willing to risk all of our funds in exchange for that. One thing that I did, by the way, because if you have it and you have an FTX account and you still have some money in there, no matter how little, might as well take a screenshot of it, right? Maybe screen recording in terms of going through like your account username all the way towards balances, just in case, right? I did that. But the second thing that I did is because this is going to take multiple years, I had like 2K left in like FTX, right? It's because it's going to take multiple years. Instead of keeping that money in there, right, in dollars, and then getting potentially $500 back, right? I just converted that into ETH, and I hope like I just feel like personally it's like about, even if I'd never get the money back, it's fine. But I just converted it into ETH, and so maybe in a few years' time, it's like 1.7, 1 point something ETH. If I get it back in a few years' time and ETH is at like 10K or 50K, I'm good. Right? Better, because if I look at it that way, imagine if you got back like Mount Gox, imagine if you got back your money in dollars, you would have definitely preferred to have them back in Bitcoin, right? So that's like, I don't know if it's advice or not, you want to do that or not, but that's what I did.
I think the difference here is they don't actually have the ETH to give back. Like, it's all spent basically. So my personal viewpoint is that if I was going to do anything, I would have everything in cash, because cash would tend to take priority over anything else in these sort of proceedings.
That's also a good point.
With the Mt. Gox thing, like, they actually had the Bitcoin. So when people got if people are going to get that Bitcoin back, then at least they've got some profit, because it's the actual Bitcoin they're getting back, because it actually has not been spent. But for the most part, I think that the like assets on FTX like have been given to Alameda, they've been given to BlockFi, like basically converted into other assets and given to these entities, rather than the actual ETH still being in existence and somewhere that they can go and get it back and like give back to users down the line. I think it's more cash orientated, but that's just my personal opinion. At the end of the day, we don't know.
That's a good point. If I remember correctly, weren't there a small number of wallets that several years after the Mt. Gox situation did receive small amounts of Bitcoin, but it wasn't clear where it came from or why? It wasn't directly part of the lawsuit. I don't know if I'm remembering correctly, but I feel like I remember at least some wallets getting unusual Bitcoin deposits. But by the time that happened, Bitcoin was significantly higher. And what Kareem points out to do, that thought hadn't occurred to me. I think I literally had like $5 in FTX still, so I was lucky because I don't keep money there. But if I had money there, I would personally do what Kareem suggested. But of course, not financial advice, but that's what I would do with my own money if I had it.
Yeah, we've got a few questions and hands raised in the audience. Let's welcome them. Gonna start off with Cal.
Hello, testing 1, 2, 3. Can you hear me, guys? Well, I'd like to say hello, Kareem. Good to see you back on the stage, and thank you for all the work you guys do. It's absolutely phenomenal. But I believe Dan was saying that this possibly could happen again, and it's something that me personally, I never assumed would ever like happen to me. But I guess it has happened. But I was having a discussion with someone from this community, and we was discussing Binance having so much cash, and he felt it was a bad idea that, Binance had so much cash and it was just irresponsible. You should have it, invested or in some sort of, I don't know, doing something with the cash. You shouldn't just have cash available. And I like the idea. However, I felt like I still trusted FTX more. Like I was more on the idea, hey, you should have cash to hand. And he was more of a, hey, well, look at what FTX is doing. They're making moves and this, that, and the third. And even though I still didn't trust Binance nowhere near as much as I would trust FTX, I was still in the agreement that, hey, the idea of having cash to hand is way better. And I still subscribe to the idea that, it's not your keys, not your assets. But I fell victim. I fell victim to it, which is it's a slap to the face to my own self, because it's absolutely hilarious that, you fall into this whole idea of comfort and believing that, in a person, an exchange, or in an ideology, and you kind of just, I can't even be upset with anyone but myself, because it's we say it over and over and over again, and it's something that, I understand. I even have storage. I have hardware storage and so forth. And it's the only exchange as well that I was hot with. So yeah, that's hilarious. Yeah. So
I think the
well,
Yeah.
trying
Sorry.
yeah.
Go ahead. And I said just a minute ago that I was lucky enough to not have anything in FTX, but I've been in crypto for a really long time. I've made stupid mistakes. I've lost a lot of money. And when I see what happened to everybody, it easily could have been me, because when we heard the insolvency rumors, I definitely didn't believe them. And I would like to think that I would have, when we suggested to people that you're better to remove funds and be better safe than sorry, the window to do that before things got locked was so low that a lot of people didn't even hear the warning before it was too late. And although I
Right.
would like to think that I would have been fast enough, I look at what happened to everybody and I think that easily could have been me, because I also had trust in FTX. I've also made stupid mistakes. I've also had money sit on exchanges longer than I should. So, like, even though I was lucky this time, I look at what happened and I'm like, with it being FTX, that easily could have been me. It just luckily wasn't this time.
yeah, I
I
think
mean, I got affected, especially because what you mentioned, like the window to do it was so short and I was traveling. So for me, I like barely saw the news. And the moment I came out of the plane, things were already like completely different. Suddenly, the acquisition news came out. And yeah, I mean, for me, I just wrote the money off mentally. I'm not expecting to get it back. I guess the only thing you can do is, like look into the future, treat it like a marathon. Like don't become emotional and start revenge trading, but just try to focus on the long term, like 2, 3, 5, 10 years.
Right.
And I think what's also important is to have cash flows. So make sure you have an income or something you can rely on. Because if it's only crypto, then events like this are even more painful.
Yeah, and I agree with both Stan and Kareem. We have a really great community here, and there's other communities elsewhere. If you're one of the people that lost a bunch of money and the whole sky just fell on you, you're not alone. You're not by yourself. And like Kareem said, you really can get it back. I've lost 4 to 5 figures in crypto before, and the only thing you can really do is take it on the chin and keep going, but try to keep your head up and remember that when things were much cheaper, you never could have imagined the prices that you've seen. You probably never could have imagined the size that your portfolio might have reached, whatever that is for you. So just realize that there will be more bull markets in the future at some point, and it really is possible to rise even beyond what it is that you just lost. So I know how hard it is, but try to lean on the community and just keep your head up, because you really can turn it around, even though it feels right now like you never will ever again. But it'll be all right. I think it really will.
Thank you very much, guys, for that advice. Just a kind of final situation in regards to the revenge trading. I feel like that was definitely something I would end up falling into. Again, not financial advice, but say, for example, in regards to Solana or DYDX, obviously I'm going to keep an eye on the chats and so forth. But I need that get back basically. I need to replenish those assets specifically. And again, not financial advice, but what are we looking at in regards to like time or an actual number? Would you, for yourself, recommend that would be a healthy entry point? Mind you, I've been here since the initial calls, so you can imagine, um, what the entry prices were and what they are now. I mean, it's way, way, way down from its all-time highs. However, entry prices from when the calls were made and was brought to people's attention was totally different from what they are today. So, again, not financial advice, but what could be the possible re-entry prices or time? Of course.
And not financial advice, obviously. But I'm seeing a potential double bottom on the weekly, right? And obviously there's a clear invalidation for it. May put a proposal forth for Alpha DAO in there about that. But again, it's not certain because it can go into all-time lows instead, right? It can break the low if the market if the contagion is too large, especially with this situation short term, it can break the lows and it can go sub-dollar and go maybe towards like 50 cents. And that would be, if I just buy it and just keep it there, that would be like a large loss, right? You end up like losing 50%. So it's all about like, sometimes I'd rather wait and buy like at higher prices, just like the certainty is different there, right? Like I have a higher level of certainty, but a lower potential reward. So lower risk, but also lower reward. But yeah, definitely don't try to make it back in one trade.
Thank you very
As
much.
much as, oh, my pleasure.
Sorry,
And
there's a question I was meant to ask about DYDX. My head's all over the place. It was meant to be some sort of unlock in regards to Celsius or something in like February, or maybe I'm mistaken, in regards to some exchange or someone who had an ample amount of DYDX that they was meant to possibly sell after some time was up or something along those lines. Maybe I'm mistaken.
That's 3AC, 3 Hours Capital. I believe they held
Yes.
FTX previously. Yeah. I'm not sure about the percentage that they held or the amount of unlocked, but I believe that there's high periods of unlocks coming in February and March. Let me double check and I'll tag you in the AMA chat. Just give me a
appreciate you very much. Thank you.
I remember there were some unlocks that happened end of last month, so end of October. But I'm sure there are more unlocks happening for sure.
Yeah, I think you're right. It is around end of January, start of February.
Right, I appreciate that.
Fair amount being unlocked. I don't know the exact figure, but I think it was above 10%.
Okay.
If I could add one thing, what Kareem just said about not trying to make everything back really quickly, that's super important because, as they say, slow and steady wins the race. But one thing I want to add is I just said that I've lost a lot of money in the past. And the one pattern I can identify every time I've lost a significant amount of money was that I was falling prey to greed, right? So in my real life, I'm like the opposite of a greedy person. I don't worry about it that much. But when it comes to trading and things like that, every time that I've shot myself in the foot, it was because I tried to make a lot of money fast. I went, oh, this will 20x or whatever, and I did things that were irresponsible, that were stupid, and they cost me money. And whoever it was that said avoid revenge trading, that's definitely important because that's what I've done in the past. That was a terrible move. And as far as the DYDX unlocks, they took investor capital a few different times, and they have these windows where they don't allow you to unlock the investor tokens for a set amount of time. That way, it doesn't crash the price. I don't know the numbers either, so definitely look to Yezin's tag for that. But there is a significant portion that unlock in February, and the problem is that if those investors don't want to hold the token long term, which is often the case, they may just sell to liquidate for the price, especially with the market being bad. If they've lost a lot or whatever the situation may be. So often you see when those unlocks happen that a lot of selling happens and the price drops down. So for my personal portfolio, I'm looking to buy DYDX in February, but at the same time, I'm not a person to take trading advice from because that's not what I do. I'm a long-term holder. So obviously not financial advice, not trading advice, but that's the situation in February. And I personally expect a lot of downside at that time.
Brilliant. That's amazing. I'll leave the stage now for anyone else who wants to ask questions. Thank you very much, guys. I really do appreciate it.
Thank you, Cal. Take care.
Thank you. Bye-bye.
All right.
Hello?
Yeah, I can hear you fine.
Okay, I thought there was something wrong. Should we answer more questions?
Max is
Yeah,
not-
sure. Let Max continue. I'm not sure if you can hear him, but
Oh, I
let him
can't hear him.
continue
Oh,
first.
okay, my bad. Sorry, Max. I can't hear you. That's why.
Yeah. Okay. Good point. Good point there. Yeah. We'll see how it goes, but approximately, I would reckon they would refund people. Like, apparently, they're able to do 10 cents on the dollar, so 10% of users' funds, which is bad. Yeah. All right. I'm gonna invite more people to the stage. Invited. Yeah. Okay, you're here. I don't know how to pronounce the name.
Thank you for the invite. First of all, Kel, just wanted to say, man, I'm very much just your bang average investor. I got hit hard. I lost pretty much everything when Celsius filed for bankruptcy. And it's hard, man. You go into like this dark place where there's no light at the end of the tunnel. And life's tough. Just getting up, just living your day-to-day life. It's hard, but I think, as the guy said there, you've just kind of got to, slow and steady, get back in the game. And I've personally just started DCAing slowly but surely with the mindset that a bull run will come around again. And as I said, lean on the community. Everyone, I feel that what you feel now, everyone's felt at some point in their journey, and it's through our greatest struggles that we learn our greatest lessons. And for me, it just taught me self-custody, man. Not your keys, not your crypto. And I buy now and everything goes straight onto my ledger. I don't even stake anymore, and that's just a personal preference. I feel like it's trying to pick up pennies in front of a freight train. But you will learn from it. As hard as it seems now, and as hard as it is to a pill to swallow, for me, it's been the greatest lesson I've learned throughout this whole crypto. And now I look back on it, I'm so glad it happened. I'm so glad it happened now, where I lost 6 figures compared to when I'll be up 7 figures, and I could have lost 7 figures. So I guess it is what it is. But you will get through it. The days will get brighter, and lessons will be learned. But yeah, guys, thanks for hosting this. I guess my main thing really is kind of around the contagion. How bad do you think this is? How deeply rooted do you feel this is? And where will we see, because sort of the crypto market go? Where do you think Bitcoin will sort of bottom out from this? And what do you also feel like the regulation in regards to this will bring? Because obviously it's bad for the whole crypto space, regardless of who was invested, who wasn't. It's a really bad light. So I guess first point, how low do you think we're going to go off the back of this? And then secondly, how hard do you think they're going to come down in regards to regulations because of this?
Yeah, I think I'll tell you my opinion on it. I think the contagion is going to be project specific. So there are a lot of projects who either have their treasuries on FTX, which is, especially if it's a DeFi project, it's like, well, a general crypto project to have its treasury on a centralized exchange is like kind of counterintuitive. And in this case today, counterproductive. So these guys are going to go under as soon as like the names start to come out. Then there will be the unfortunate projects who have had investments from FTX or Alameda, which are very numerous, right? Because Alameda was almost in every round. They will have their tokens dumped in some form or manner. If you look at Starkware was doing really well overall. No token, right? But in terms of development, doing really well, building for multiple years. But unfortunately, 3 Arrows was one of the main investors in Starkware. And that led them to have to accelerate the token launch. But also we know that token is going to get dumped, and most probably, unless like there's some miracle, but it's going to get dumped when it hits the market, because the creditors will want to be credited, right? The creditors of 3AC. So I reckon a similar situation would happen here. In regards to Bitcoin and ETH, obviously any holding that, it depends on how the liquidation process is going to happen for Alameda and FTX. If the liquidation process is happening in a sense where those who had BTC balances will be given back BTC, ETH, so on and so forth, like it'll be in kind, then I don't see an issue. Obviously, there will be like some conversions on the market. But if they're going to reimburse everyone in fiat, but obviously that's a very long process. But if they're going to reimburse everyone in fiat, then that means selling all of the assets on the market and then reimbursing in fiat. But that will only happen in a few years' time. And allegedly, according to Zane Tackett, former head of institutional, as Max said, they have about $900 million liquid, so about $1 billion. So today, $1 billion can hit the market, but not too hard, in my opinion. In a few years' time, the effect will be even smaller. So in terms of BTC and ETH, I reckon they just go sideways. Like, look at the news happening, right? ETH was, when the news hit, it was trading at, it opened $1,280, right? $1,280. Right now it's at 1,265. It went all the way down to 1,200, which is not that much of a dip, right? And it's back to where it was, just like $15 shy from where it was. So market seems to be a little bit indifferent. It's just going to hit specific projects, in my opinion.
Yeah, that's my sort of opinion as well. Like as you said, Alameda was in quite a lot of seed rounds and funding rounds and stuff like that. They have or at least they did. They had quite a lot of holdings in various, like in every ecosystem and various projects. But I think it's not going to be a sort of mass liquidation of BTC or ETH. So I think overall the market will be okay, but I think on a project by project basis, we might see a lot of pain for those projects that are heavily entwined in the sort of situation on both the Alameda and the FTX front. But I mean, projects to look out for would be ones that are actually being open with their involvement in Alameda and FTX. Like, for example, Layer Zero posted a memo to their investors stating like their balance sheet, like what they had. I believe they lost 11.5 million to FTX, but like they said that they had like over 100 million in other assets on chain, both on chain and off chain, and cash. So it's difficult to sort of estimate what the full extent will be on a project by project basis, but I think for the most part, like the overall market, there's not like any sort of I can't see any sort of like mass liquidation of like the top 10 assets in any case. So I think for me, the macro situation still is in play. Like, we've just seen one of the lowest, one of the most better than expected CPI prints that we've seen this year, basically. Which, in my we're of the thesis that this is like the what the Fed would like to see. This is what is potentially going to lead to them first off slowing the rate of rate hikes, but then secondly the inevitable Fed pivot, which is obviously bullish for risk on assets. So yeah, the macro thesis still stands, and I think as we go like from next week to from week to week, I think that sort of narrative comes back into play more so than what's going on right now. There's just a lot of uncertainty in the market, the crypto market specifically, because of we can't see FTX's and Alameda's balance sheets. All we can do is estimate. But I think as we go on further down the line, and all the sort of intricacies start playing out, all the sort of connections, all the contagion starts playing out, it becomes less uncertain over time. And then I think people do start gravitating back to the Federal Reserve narrative.
Okay, awesome. Yeah, that was really good insight into it. I think, probably best then, from my sort of stance is to steer away from sort of smaller alts and kind of stick with the top sort of blue chips, so to speak, until it sort of clears up. But no, that's brilliant. Thank you very much for that. I really appreciate the detailed answers.
No problem at all. Thank you for coming on stage.
Thank you for coming.
Cheers.
Take care. All right, let's invite rollers.
Hello. If you're speaking, we can't hear you.
Hello.
This happens sometimes. I'm not sure if it's audio settings on your end, but it has happened in the past. I'm not sure why we can't hear you. I would check your Discord settings just to make sure that it's the correct audio setting, and stuff like that. But
I will mute you for a second, rollers, just until you try and figure that out and invite someone else in the meantime.
I think I just heard him. Can you talk, rollers?
Nope.
I thought I heard someone say hey in the background.
All right, I'm gonna mute you and invite someone else. OJPU45.
Hello, do you hear me?
yeah,
Yes.
Yes.
Well, I got a few things to say. First, as you say, Karin, this was all planned because the U.S. media has covered Bankman as the real guy the last three years. Second, he was the second donor to the Democrat Party in the U.S. And this happened in just a few days before the elections. Third, yesterday, the Nasdaq was pumped 7%. So my question is, where does this all money comes from? Four, 1 year ago or 1 month ago, he bought a stake of Robinhood. What will happen with Robinhood? Because if he did this to the FTX user as me, I lost like 5 figures in dollars. But I will take your advice. I have all my money in Atom, Cosmos. I won't change to US dollar because I will fight for this, even if it takes years. But even if it takes years, I will prefer to take my atoms in 3 to 4 to 5 years in a up price than now. But that right now will be very difficult for people to trust in Wall Street. I'm gonna be honest, in cryptos and even in banks, because we are not safe. We are not safe.
Yeah, I mean, what's happened today with FTX, right? I mean, it has happened numerous times with different banks. The problem, like the only problem here is that FTX was not allowed to have fractional reserves, whereas banks had that like as part of their terms. Like they're going to have fractional reserves and they're allowed by governments. But still, it's like this type of like bankruptcy has happened in different countries before as well, and different banks.
Okay.
One thing that I will add is in regards to like transferring, converting your funds to Atom or any crypto asset in general. Like I personally hope like that they will refund people in kind, so they get either that if they had dollars, they'd get dollars. If they had tokens, they'd get tokens. But it's not a guarantee. Like I don't know how the bankruptcy proceedings are going to go through. Like they may as well like just give you dollar equivalent to when the time happens. So like now, for instance, to when the bankruptcy was filed. I have no clue, right? So again, don't take this as gospel or financial advice. I've just tried it on my side, but I've tried it on my side on a small amount because like that's what I have in FTX. But don't take my word for gospel. I just hope that yes, they do refund you in the currency that you want, like the asset that you want.
Okay. Well, thank you very much, and I feel very, very sad today. For me, for the crypto industry, is a very sad day because some people may think now who is next. Uphold, for example, Binance. Who is next? That's the question. Thank you very much.
Yeah, true. Very possible. But at the same time, I'd say just like at that point, instead of thinking in terms of who's next and just don't keep your funds on centralized exchanges in general, unless like you need them there, you need a small amount. But no, in general, you shouldn't have all of your money in a single place, right? Like even your crypto money, like say you have, even if you're like a degen crypto advocate and you have all of your money in crypto, like majority of my capital, for instance, is on chain, like in crypto, right? But even then, like diversify across exchanges if you want to use exchanges, right? Exchanges are in general not the best idea because as cliche as it is, but not your keys, not your coins, right? But yeah, diversify. Even if you have like a ledger, you can have 2 ledgers. If you have even on a single ledger, like don't keep your funds on a single address because with one of the addresses you may have interacted with a certain contract. There may be like some sort of a vulnerability that you only find out about when it's too late. Have multiple addresses, spread things around. It's always good to diversify like where things are when it comes to money.
Yeah, well, one thing I'd add there is that I think another thing to come out of this is that the centralized exchanges are going to have to start being more transparent with like what they're actually doing with customer funds. Like we started seeing it with, for example, Binance stating their assets, which we could see anyway before because we're able to see everything on chain. But for example, the deposit addresses. But I think they're gonna like be forced to be more transparent. I think whether they intend to or not. I think that's a sort of not a silver lining, but I think for something like this to happen again at scale, which it probably will. There's always loopholes. There's always like ways around that, like to get away with doing something like that for so long. But I do think like going forward to see a lot more transparency from centralized exchanges, which I don't know. Like, I don't understand why that wasn't in place or like the industry standard to start with. But here we are.
And I wanted to point something out about the way that you can easily fall prey to some of these mindsets. So, like, while I was listening to OJPU talk, and he said, who's next? Is Binance next? In my mind, the first thought I had, right, was like, well, it'll never be Binance, right? Because they're the biggest one. And then I stopped myself in my mind and thought, well, if you would have asked me last week about FTX, I would have said the same thing. And even right now, that's how my mind works. So be careful the way that you think, because even listening to him talk, I had that mindset of like, that'll never happen. And I was like, wait a minute, you just got done watching it happen. And then one other thing I would add is, Sam was the face of regulation for a lot of US regulators. He was like the smart guy that represented us and all that sort of shit. And it's like, regulators are notorious for making overbearing regulations that are tone deaf and don't have any knowledge of what they're regulating. That's a notorious pattern across all things. And my concern is that regulations are going to get much worse than they already are, and they're going to be in a way that doesn't even make sense. So one of my concerns going forward is that we're going to see just terrible regulations, even worse than they were already looking at as a result of this. So that's one of my concerns. But be careful of your own mindset, because I just caught myself slipping right now. So that's how it can happen to you.
Should we
Rollers, I see you trying to talk, but we still can't hear you.
Is Kareem muted actually? Hang on.
Try again, Rollers.
No,
Try your PC settings or your phone settings, Rollers. It may not be in Discord. It might be whatever your mic is actually connected to. So if you're on PC, go to settings and see if you're able to see your mic somewhere else. One other thing you can do is if you have like a recording software, try recording software real quick and see if it picks up your mic. Like record yourself talking for 5 seconds and see if it gets it, to try to troubleshoot where the problem is. If you keep having trouble, you could always type it in the AMA chat. Or if you want help troubleshooting, you could DM me and I can try to help you too. So whatever you want.
Yeah. In the meantime, we can get someone else on stage, I think.
Yeah. HGG. I think I may be inviting people the other way around. Like, yeah, I think. Kazo, you're next, then Adam.
Do you hear me, guys?
Yes, we can.
Okay, I have just one question. Do you still believe in the several X reports which you published a couple weeks ago?
Yes. I don't know how, like, Kareem, how much detail can I go into here? This is free, isn't it?
Yeah, that is free. All right. Given the situation at hand in terms of what's happened with FTX, there's only 89 people, and I reckon at least half are pro members. Go for it. Speak freely.
Yeah. So, so like the 30x and the 50x both, like they're sort of like my sort of core investments kind of thing. Like the cross-chain ecosystem obviously is still massively in development. Obviously, demand is not there for cross-chain swaps at the moment, because demand in general for DeFi and the sort of DeFi in general, like the TVLs dropped massively. There's not as much on-chain activity, and we are really in the depths of a bear market here. But for me, like the 30x and both the 30x and the 50x, like they're integral parts of what the fleshed out cross-chain ecosystem will be. Obviously for the 50x, we're waiting for the chain to go online, at least to testnet, and that's part of the Alpha DAO proposal. We'll continue to DCA in some form or another into that, but
okay, that's what I would know. Thanks.
But obviously, there's always the possibility of things like turning around, the team ending up, I don't know, doing a 180 like Sam did. Like at this point, can't really trust anyone, not gonna lie. But yeah, I agree with everything Eugene said there.
Okay, so there are no big fundamental changes. So
cross-chain is always going to be required, right? Cross-chain is always going to be required. And if people start, like if you look at MetaMask, for instance, MetaMask allowed, just recently added the ability for you to bridge through it. Like they've integrated it similar to how they integrated swaps. I don't know what the back end is. Eugene probably knows more about that than I do. But obviously there's a demand for that. Same thing with options, right? Options is just like, we have a thesis on it, we may be wrong, and eventually no one in crypto ends up like trading options. I just sort of doubt it, at least for me, right? I don't think it's like the thing that catches the most adoption, but at the same time, in my head, it's like the most asymmetric risk reward because it's so small right now. Like the entire options.
Yeah. Okay. Thanks, guys. Yeah.
No problem. No problem. I had been waiting for more than 30 minutes, but it's okay, I know. So good evening, guys. Do you hear me? Can you hear me? Okay. So I have a question regarding the crypto overall, the investment that we are doing. So I had been a part of Cryptonary for more than 1 year and a half, and I had a total conviction in all the sectors that you had chosen. Okay, but I'm like thinking if someone invests for a long, very long term process, does these events that happens from now and then, doesn't it give you the idea that the only thing that you can invest in and say that you are safe, or let's say that you have a guaranteed result that is gonna grow up and no one can change the path or the way of it, is Bitcoin, instead of like investing on those altcoins that are all run by a person, or let's say, or a group of people that no one can guarantee that these things might not happen with all the altcoins and the other projects.
The Nomad Bridge exploit, it doesn't actually account for a variable being in the right place, but it's the wrong. A number being in the right place, but it's the wrong number. For example, so like when things like these happen, like you need to be able to step in. Like it can't go to a 48-hour vote as you're being actively exploited, because at that point all your funds are like gone. So like in terms of risk reward, like yes, like Bitcoin is probably the safest bet. But like what's the potential sort of reward? So it's basically down to each individual to figure out what they're actually willing to risk here. Obviously the upside potential for Bitcoin is still a lot higher than we'll see in traditional finance markets, but like that upside is basically limited to well, it's not, it's limited. I say limited, like limited when you compare it to the potential of some of the assets on the altcoin markets. And I mean, there's problems that we don't even know are problems yet that are going to be eventually solved by assets that don't exist yet. But yeah, like that's like my sort of take on like why not just invest in Bitcoin? Like it's basically like a risk reward situation. Like I'm willing to take on the extra risk of failure of some of these projects, or at least exploits of some of these projects for the higher upside potential. I don't know if anyone else on the team has something to add there, but that's my sort of personal standpoint on that question.
So personally speaking, so I'm gonna tell you like not how I invest, but I always include a large cap in my portfolio. I invest heavily in altcoins, but I always love to invest in BTC and ETH. I have high conviction in them more than altcoins, but I take on extra risk, as Eugene said, by investing in altcoins, because your reward with BTC and ETH is not much less, but is less than altcoins. But I definitely would always have BTC or ETH in my portfolio, because you want to diversify, you want to hedge in case anything goes wrong with altcoins. If you just want to invest in altcoins, you're taking on more risk in case a project fails or something goes wrong. But that can be said to any asset in crypto, because it's still a new market, still immature. So that's why you should always be very careful with managing your risk and never go all in. Always include you have income and make sure everything is on point.
Yeah, like one more thing to add to the sort of the what you said about like it's run by one guy or like a team of guys, a team of people. Like the most, if not all, well, most DeFi. I'm not gonna say all. Like most DeFi projects, like the end result is that they do decentralize and they use their token for that decentralization. Like it's not going to be this way like all the time, at least for like most of the projects that we're looking at. And a lot of the projects have already decentralized. Like for example, the 50X has a DAO. It doesn't have one person running it. The votes go on chain. Cosmos is another example. Cosmos, the Atom ecosystem has a governance DAO, and we're seeing that in effect with the Atom 2.0 proposal updates. Atom 2.0 tokenomic updates and the way that the chain operates, like that's all gone to a vote. Yes, validators have probably a higher say because obviously they have to have a higher stake, which means that they get a more weighting. But they're also the ones at the same time that have the most vested interest in the project. So like decentralization is the end goal, but it's not always possible to start with. You can't just launch a project completely decentralized because you need decisions to be made on the fly or decisions to be made quicker than the voting period would allow. For bigger caps like Ethereum, obviously that's like for bigger caps, like they're more entrenched, like they've got like that sort of battle testing behind them. Any updates are generally like major changes rather than like the odds of Ethereum going like being like the Ethereum blockchain itself being exploited are like very slim. So they wouldn't need to ever act quickly. Like they're thinking like longer term. Like, so for example, the move from proof of work to proof of stake, like that's been in the works for years now. Like, so like they've got the benefit of time, whereas with these new projects with like lower market caps and TVLs, they're easier to exploit because they don't have that sort of financial backing, which they should do down the line, which makes it easier to decentralize, because then you can start moving from, are we going to survive this year, to what updates are we going to do in 3 or 4 years time.
I see. So this I don't know, but this may bring us to the conclusion that if Bitcoin had an owner and if Satoshi Nakamoto were known, like would it have been at the same risk of the just like the other projects? Was it like, does the only thing that makes Bitcoin different from these other all altcoin, including Ether, is that it doesn't have an owner or no one knows the owner?
I would say because Bitcoin has been, the most around, it has the highest number of miners, it's more secure, it's been battle tested. I think that thing it differentiates it. So like Ethereum doesn't have one owner. Yes, Vitalik was, one of the co-founders, but he's not purely responsible for Ethereum. He does have some say, but you have like over 400,000 validators who take part in decision making and govern the protocol. So it's all about the community as a whole rather than just one person.
Yeah, exactly, yeah.
Yeah, and if I could add one thing, I definitely agree with everything Kareem just said for sure. One of the things that I look at, I have a technical background and I've been in crypto actually since before Bitcoin. There were a few other worse projects before Bitcoin, but the way that I look at them is never, even now, as an investment, I look at them as a technical thing, right? Like a technology. So when we use the term protocol, what we're talking about is a very specific set of rules that dictate how they work, right? Like internet protocol that dictates how the internet works, all that kind of thing. So what I actually look at is a technology itself. How does it actually work? And everything that I've ever done has been from that perspective. What looks like a good technology? Like earlier, Yazan said, there's strange things going on with Sol, but the technology is good. That's always the approach that I take, is what does the technology look like? And that's what ultimately dictates these things. And in the question of Bitcoin, there's the same deal, like you said, is the big thing that we don't know who Satoshi Nakamoto is. And one thing I point out is we don't even know that it's a real person. We don't even know that it's a single person. I mean, there was a white paper written by the NSA in the late 90s that outlined a lot of this. Microsoft did a lot of research in proof of work and proof of stake before we ever had Bitcoin. So in reality, I think that there's a lot that we either don't know or will never know. But, the reason why, even when I got into crypto, I never looked at it as an investment until like a couple years ago, because I was so focused on the technical side of how it works. But I've had good luck.
So we may get to the conclusion that for the altcoins, we may use a shorter time frame. Like, it's not something that you would invest in forever. Like, you can invest in Bitcoin and Ethereum forever. Like, you are going to hold it for like 10 years, 20 years. But when it comes to the altcoins or the alternative projects or the blockchain, it's like you should have a time frame in your mind. Like, for instance, I would like to invest in Rune for the upcoming 3 years. Once it reaches a certain level of development, so there are not any guarantees that it will continue like this. So just like any other projects, right? So for let's go ahead. Yeah, so the idea is, I just want to make it clear, is that you can trust Bitcoin, you can trust Ethereum for a very long period of time, but other projects, so I know the risk reward is way higher, right? But maybe if we could decrease the time horizon in investing in that would be better, instead of holding it like forever or for too long, because you might never know what will happen within like 5 years or 6 years.
Well,
And look, we are all investing in order to make money, right? Whether you invest in gold, cryptocurrencies, stocks, whatever, at the end you're gonna have to take profit. Yes, like we mean that Bitcoin and Ethereum are the most secure, but at some point you're gonna have to realize those profits because you want to make money. So I don't believe in just holding assets for the rest of your life. Or like you could, like for example, if I'm buying Bitcoin and I made a lot of money, I'm gonna take 50% profit, 60%, whatever. I might leave a small bag over the long term, but eventually my goal is to make profit. I just don't want to hold something without realizing my profit because
It's about managing yourself as well. Like you can have all your money into crypto, but obviously that's also not a healthy thing. Like, your mental health, it's not healthy to live like that. So being able to take money out that you think is necessary, maybe to buy a house, pay your mortgage, pay your rent, being able to know that if something goes wrong, you can maybe support your children or, like pay for the things that are necessary. I think if you can manage that well, then I think it will become much easier to, like experience these events because we've seen that a lot of these collapses that happen at the exchanges are because they are mismanaging funds. So I think the best thing you can do personally is be very responsible with your finances and make sure that you are prepared if something goes wrong inside the market, and to make sure that if something goes wrong, it's not you losing your house or you not being able to support yourself. So in that case, I do agree that taking profits is definitely, like important to be able to maintain that standard.
Right. All right, guys. Thank you so much. Have a good day. Thank you.
Hello, how's it going, guys? You guys good? Yeah, I was a little busy, so I wasn't able to attend the whole call. Are these calls recorded so I can play it back then? Okay. Yeah. I just had two quick questions. I didn't want to take up too much time in case anyone else, if I keep mine short and sweet, maybe someone else can ask a question. But the first one was it may be a bit of a naive question, but is there any advice you could give around people like with stock coins to deposit a certain type of withdrawal? For example, like try a ETH withdrawal or something. Anything you recommend, or is it basically just a lost cause and move on? Yes. No, so like if you have coins stuck in FTX, is there any tips or tricks you guys know of, or like to request certain withdrawals that are again accepted, or is it basically a fully lost cause? Yeah.
All the withdrawals like came
Well,
with
the
this
thing
weird
is,
Bahama rule.
the Bahamian entity isn't bankrupt. I think my theory is that they have transferred a lot of their assets themselves to the Bahamas entity, or that's an entity that still holds a lot of value. Maybe the real estate that they own, or some of the money, because of all the entities that were filed bankruptcy, the Bahamian entity is not mentioned anywhere. So I find that very suspicious.
Yeah. It is what it is. We'll move on. I had another quick question. Basically, I just wanted your take on this. So, let's say at the moment I'm spot trading with my own capital. But what's got me worried recently? Obviously, I was lazy and stuff, so I used to hold funds on like Binance and different exchanges, which is soon not to be the case in the next week. But I just wanted to know if you're spot trading and, for example, you're buying different coins, you're trying to time the market with technicals and fundamentals, and from your own analysis, like you're buying and selling, but you're not buying and selling every day. Like you're placing 1 to 2 trades every 3 to 4 months. So when your money is in Tether or a stable coin, do you recommend to hold for the next couple of trades that comes? Do you recommend to hold your money and withdraw it into your, like, for example, UK bank and into PayPal, and then when you're buying, do the same thing? So from bank to PayPal, PayPal back to cryptocurrency, or is it okay to hold stablecoin for those kind of lengths, as in 3 to 4 months? Yeah, thank you.
What was the question? Sorry, is it okay to hold stablecoins?
Yeah, the question was if it would be better if your cash to hold stable coins for the period of 2 to 4 months, or to get that money back, like, as to speak, into UK land, into your bank, and then when you see fit to buy, you send the money back out, or just keep it in stable coins for a while? If so, how would you like? I just want to pick you guys' brains. How would you play that? Because that's been on my mind, but I thought I'd save it for an audio call so you can express yourself better. Because it's easier to say it than to type it.
Want to go first, Eugene?
I was gonna say, if you are gonna it's more of a just sort of like, how would you go about that? I would spread it across like a number of stable coins so that there's no single point of failure. So like USDT, USDC, even BUSD, like I'd have a small portion there. But like don't rely on one single stable coin. I mean, we saw it yesterday with the USDT scare. Like it can quite easily just go like, it's not quite easily, like it would take like a significant amount or like something to come out with Tether, like that they weren't actually backed. But like I would spread the risk about various stable coins, but obviously if you're not planning on spending the cash, then and for 4 months, then there's absolutely I don't see any reason to hold it in stable coins. Like I would prefer cash if I wasn't spending it for that amount of time.
No, I think it's like he wants to park funds for 2 to 4 months and then deploy it into the market.
So like
what would be the best strategy there?
Exactly. Yeah. So like if I sell Rune at, let's say I sold Rune at 12, and obviously if you've sold at 12, now is an excellent buy price, regardless of what what you feel like the market is. You're getting more coins. You can even invest less money. But I was just wondering, as Kareem said, if you're sitting on your cash for a little while, knowing you're going to redeploy those funds, what would be the best way to like maneuver around that? Because obviously if you're going to keep your profits for life, then you just take it back to whatever country you're in, take it out, you can buy property, whatever you want. But if you know like you're going to go back into the crypto market, did you guys have a preferred stable coin, or do you just as you said, just always mix them all the time? Was that your intention prior to this whole FTX debacle, or prior to this, did you guys have like a go-to stable coin, or was it always mixed?
Personally, I've always gone with USDC, right? I still hold USDT, and I like to diversify across stablecoins because you never know what happens, right? But in regards to your question, to answer it outright, I go towards the self-custodial way. I trust those stablecoins more than I trust my bank, because you never know when they decide, oh, you know what, we're going to freeze your account. With USDC and USDT, because they are centralized stablecoins, they can technically freeze your account. Your funds, but I mean the odds of that happening are quite low. But you've got USDT, USDC, BUSD, you've got DAI, you've got a bunch of stable coins that you can trial, and like you don't necessarily need to do like 4 stable coins do 25% each. You can do like, I don't know, 30% USDC, 30% USDT, and then the other 40% split across 2 or 3 different stable coins. Depends on how much you trust. But at the same time, keep a close ear to the ground, because for the most part, if something is about to unwind, you'd be able to tell. You'd have a little bit of time if you've got your ear to the ground. Like if you look at the UST situation, as Alpha DAO, we held funds in UST, right? Anything that was capital that was on the sidelines waiting to be invested was always in UST and was actually staked in Anchor. But we started seeing the unwind. And I remember we got out at an 8% discount. So we got out at 92 cents. We did take a hit, but not the same hit as if price went to 0. There is usually a little bit of time. Like recently, yesterday, because USDT was being stress tested, we hold some funds as Cryptonary, the company. We hold some funds in USDT. What I did is I immediately went on-chain and I swapped those to USDC just in case, because at this point, I don't know who to trust, right? Paolo seems to be like an amazing guy, and Bitfinex and Tether in general like seem legitimate. They've gone through multiple storms before with the tether truthers and whatnot. But at the end of the day, at this point, can't really trust anyone. So even if we may take that money back into USDT, we've safeguarded it because it seems like USDC, at least in this period of time, may be safer. So as long as you've got your ear to the ground, I wouldn't really be worried. You've got time to like usually the market will give you at least a few hours, at least like maybe 12 hours to get out at a decent discount.
And I've realized the importance of that. Owning crypto is like having a kid. You gotta always, out for him, make sure he doesn't fall. But that high risk comes with high rewards. So thank you guys for all your help and stuff. I appreciate it.
No, of course, our pleasure, Adam.
Thank you.
All right, take care.
Take care.
Yeah, I think we're coming close to the end, right?
Yeah, that's a wrap, I think. we've run over by a little bit, by like 20 minutes. Apologies for the questions that we've not taken on. But we've run over by 20 minutes. Usually AMAs are like an hour. Our rollers is here. Let's see if your mic
Can you hear me?
Yes,
It's
we
okay,
can
right?
hear you. All right, let's go.
Yeah. Thank you, guys. Thank you for the outputs. It has been really a great AMA, and sorry for all the guys who lost their funds in FTX. Mine's just a quick question I want to ask. When the crypto community was building up, we saw a lot of people helping each other, no matter in which crypto they were working. They used to help. It was more about building, but now we see it's like a cutting edge competition, and everyone wants their chain to become the number one chain. They want more transactions, and it's been like that. So, is it not again? It is not good for the retail investors. This type of competition.
What do you mean? I think competition is good for the space, to be fair. Maximalism is where it goes wrong. Competition sort of breeds innovation. But it's when it's like a case of like tribalism kind of thing. That's when things become toxic. But I think overall, competition is good for the space.
D-Maxi, then we got to try to undercut each other and throw each other under the bus. And I think when it comes to that kind of that tribalism that Eugene is referencing, that's when it becomes detrimental. But I think healthy competition is good, right? Like if you have a friend and you and that friend are close and you play the same sport, you try to beat your friend, as good as you can, right? Because you both love it, and that's healthy. But it's when you try to undermine each other and throw each other under the bus that it goes bad.
And also I've seen a recent post that DYDX has stopped Solana trades. They're not accepting any Solana trade, and I've saw a tweet which is so this is not decentralization and anything, but there's a thin line between decentralization and centralization. As you can see, Solana price is too volatile, so they have stopped it. It is for it is for good, right? But people are commenting saying that no, this is not decentralization and all this. So what's your take on this?
Sorry, Dan, before you continue, just wanted to say that Solana is back. You can trade Solana back on DYDX now.
I've been done for a while, Yazan. Maybe you couldn't hear rollers.
Sorry?
Yeah, no, I think Yazan had an issue. I don't think he can hear you. I would say that, I'm not sure the entire reasoning behind stopping I've not looked into it, stopping the trading on Solana, but it's obviously for a good reason. Sometimes these things happen for a not a good reason, but I would imagine it was to do with the volatility and the liquidity, because obviously DYDX is liquidity based. So if the prices start getting obscene kind of thing, and there's high volume to and it's not weighted enough to there's not enough liquidity to meet the demand, then the prices can tend to be wildly off, which means that users will end up losing more money than they had to, either through slippage or other what's the word I'm looking for here? Other sort of issues that arise with high slippage, for example. And we saw that with on Solana itself, with Solana IDOs. People were trying to swap some of these new projects, new tokens, and there wasn't enough liquidity, so the slippage would be 50%. So you'd only get you would lose 50% of your assets just straight off the bat before you'd even had the chance to hold the token. So I think that as I said, I'm not sure the exact circumstances of the halt, but for a project like DYDX, usually it's for a good reason.
Yeah. Thank you, guys. That's all from my side. Thank you so much.
No problem.
All right. Coming to an end. Thank you, everyone, for attending. The recording of this will be out sometime in the next 24 to 48 hours. And yeah, thank you again.
Thanks, guys. See everyone next week.
Thanks, guys.
Thank you, everyone. Wonderful AMA. See you all.